Hey, what's up everyone? Welcome into the channel. My name is Brent with Investing on the Go. Today we're covering the No 8 to 5 Living from Our Brokerage series. This is going to be week 23 of our Robinhood update. In this video, we're going to be hitting up a lot of different things. I meant to make two separate videos earlier this week and I never got around to them. We're just busy with school getting out this week. So in this video, we're going to be doing the market update really quickly. We just took what took place here on Friday. Number two, we did do some buys earlier this week. I wanted to make a whole video on how we started using margin, what we purchased with it, what my plan was going into this week with margin, the dividends that were paid out because of the margin that we use and the extra shares that we picked up. We got a ginormous dividend payout from one of our positions. Number four, we'll go ahead and do a quick recap of our dividend portfolio. We picked up we almost doubled the size of two of our positions, and that increased our yearly income by quite a bit. So we're going to go ahead and cover that all in our dividend portfolio income breakdown. Then we'll dive into our Robinhood portfolio. The massive sell-off here on Friday dragged the portfolio down. Stick around. And then number six, our big plan for June and beyond kind of goes back into our buys. So I'll kind of probably tie in our update plans and our buys at the same time. So if you guys would like to bounce around during the video, definitely jump between using the chapters down below. Otherwise, I would appreciate if you smash that subscribe, smash that thumbs up, drop me a comment down below if you guys purchased anything this week or loaded up here on Friday as the market was selling off. And let's go ahead and get into the video. So market update, pop on over here. So Friday, huge sell-off. It all started off in the morning as the payroll numbers essentially kind of came out. The jobs came out stronger than expected, and the non-farm payroll rose to 172,000 in May, far above the expected 80,000. So, and the unemployment rate remained the same at 4.3%. So, because of the resilience of the labor market, the Federal Reserve is more likely to hike rates this year. As I had already stated, I was expecting definitely a rate increase by sometime around November, December timeframe, if not, as it says earlier, 2027. So that chance of that rate increase has increased. And we did see the S&P sell off much more than what it's stating here. The S&P 500 today actually sold off 2.58. The NASDAQ sold off a whopping 4.8%. The Russell 2000 sold off a 3.55. The Dow Jones only sold off 1.35. And across the board, we can see huge sell-offs between Meta, Microsoft, which had already been beaten down, but continue to have a massive sell-off today. NVIDIA down 6.2. And then even in the after hours, we did see Bitcoin actually drop below 60,000 for a minute before kind of bouncing around in that zone. As far as sectors out there that were hit the hardest today, we saw tech going down 6.66%. Interesting there. We did see financials positive on the day. We saw healthcare positive on the day, utilities positive on the day, and then consumer staples positive on the day. Besides those four sectors, essentially all the other ones had gone down over 1%, especially, with tech being hit the hardest. So let me know down in the comment section below if you guys had purchased, if your portfolio is pretty tech heavy, how much are you down today? We'll be jumping into my Robinhood portfolio here in just a minute and kind of go over our portfolio breakdown, but it was definitely hit pretty hard. Okay, so let's bounce over here. Let's go ahead and go over our buys that we performed, and we'll kind of touch on our plans and updates. This week, we did have two ginormous buys. Now, we started off this week by purchasing 2,147 shares of the Tap Alpha Innovation, ticker symbol TDAC. We purchased this at $29.10 limit price on Monday. Then we also picked up T-SPY. We picked up 2,381 shares at $26.23. So if we go back here, and I picked these up in the morning, so 10:05 and 10:08 on June 1st, which was Monday. So popping back over to TradingView, if we go ahead and take a look here at TDAC. Okay, here's the first right on through here. So around 10 in the morning, right in through this little location, right through and through here, I went ahead and picked up just a massive amount of shares. Now, I don't mind this sell off. I do have a plan going into this week. If I was buying now and the market continue moving higher, I would, it was unexpected, but if it did happen to happen, then I would just continue moving along with the market. If the market sold off, then I had a plan for that as well. You can see here when I did purchase in the morning around 10, the market actually kind of trended a little bit higher throughout the week and maintained up until Friday. Up until Friday, I was net positive in my positions by a small percentage, under 1%. Now, today we had a huge sell-off. Today, TDAC is down a whopping 4.49%. And we take a look here at T-SPY. Once again, I bought back here on Monday, right around that 10 o'clock point, right in through here. Looks like a bit of a sell-off, but it actually went ex-dividend here from Monday going into Tuesday. So there's that drop off right here. In actuality, it didn't really lose much momentum up until Friday's sell off. And then that's where it sold off 2.67%. You can see here after hours, it is up a bit higher, but it's not in actuality higher because the SPY here, if we look at the SPY after hours, the SPY is actually down. So all in all, I did buy pretty heavy back on the 1st of June and it sold off. But what my plan was here, so if we bump over to our plans, we won't be chatting about our plans once it's over, but what my plan was, so the brokerage paycheck margin strategy. So this position, these two positions were used with margin. So my current portfolio balance at the end of May was roughly $364,000. The margin I had been using was $1,000. I had been using $1,000 of the Robinhood free margin. I wasn't having to pay any interest on that, and my buffer margin was around 74.34%. My borrow rate was going to be increasing from 4.5 to 5 unless I begin to use over a certain amount of margin. So my execution plan for June was to begin deploying some margin. I went and deployed about 125,000, so 62,500 into TDAC, 62,500 into T-SPY. This would I did at one point almost consider IWMI, but I wanted to stick with the T-SPY and TDAC position, so I did cap my leverage at 125,000, bringing my total margin balance to somewhere around 126,000 and below. My projected margin buffer was going to remain healthy. I'm not going into the 50s or 30% margin level. I'm just maintaining the 65%. And if I want to, I can always use more margin to dollar cost average if the market continues to sell off. But the market crash cushion that I've kind of created here is that my portfolio can absorb a massive 37% correction before any sort of margin call is triggered with the amount of margin that was used. That would mean that my portfolio would have to drop to about $140,000 of equity before a margin was being called. But by using this margin, we're creating a spread. So my borrow rate is actually 4% with this 125,000. I'll go ahead and show you guys once we move into the Robinhood style. But between buying into TDAC and buying into T-SPY, I essentially gave myself a 14.5% blended yield, and the estimated margin cost for this on a monthly basis is $468.75. And my expected monthly dividend income between T-SPY and TDAC is an increase of $1,510. That would mean that my net monthly spread between the margin cost and the X of dividends is around $1,041.25. Now, this capital will be used to maintain my margin buffer right around that 60 to 65% area. And then any excess, that 468.75, I'll be using that to pay down the margin cost. And then any remaining piece can be reinvested back into the portfolio. I don't plan to use this capital itself to pay for my expenses and use it up. I want to reinvest this right, such as right now, the market sold off pretty heavy. I got a bigger than expected dividend payout from T-SPY, which we'll cover here in just a minute. I'll be using a portion of those funds to reinvest into the portfolio to dollar cost average as the market sold off with, all the semiconductors and such kind of selling off. Now, what is my safety net? Why am I not worried that the market sold off today by nearly 5%? Well, my ultimate safety net here is my real estate liquidity. I'm hoping if everything goes well, within the next 1 to 3 months, my property will have all that it needs to do in order to sell to the buyer. And when that does happen, I'll have roughly a definitive $100,000 to $125,000 of capital to invest into the market at that time and inject capital because I will have a home sale. Like I said, if the market had continued to rally, I would have captured some of the upside. And when I do eventually sell my home, I will be able to take the equity, the 125,000, and just kind of buy it to the market at those highs. But if the market drops, I will have zero stress and have zero stress despite looking at my portfolio being down massive. That 100,000, 125,000 that I will be able to invest will essentially wipe out 80% to 100% of my current margin balance, instantly resetting my portfolio back down, right? I'll be dollar cost averaging, 5, 10% down, 15% down over the next, 1 to 2 months as my home sells. And then this will allow me to buy any sort of major index dips on my own terms, right? It does suck to see the market move higher and your portfolio is just getting more and more expensive to buy into. But I put $125,000. It hurts in the short term to see that equity just kind of fall as the market falls. But by the time that my home goes through and processes and sales, and I get that $125,000 of cash hitting my account, I'll be able to wipe away any sort of margin debt. I'll be able to dollar cost average into the market at, say, today's 5% dip, 10% dip, 15% dip, depending on when I get the capital, where the market's at. It'll be eventually just be fine. So that's kind of the plan right there. So that's why I injected the capital in the way that I did. I had a plan going into June. I wanted to use margin. I wanted to get this process kind of going. I have a buffer between my margin cost, the excess dividends, keeping my margin in line. And when the market did dip, which it has, I will be able to use a good amount of cash from my home sale to just buy into the market, getting rid of the margin, dollar cost averaging lower, and I'll be able to amplify that with more margin when the market's low, amplifying my recovery on the way up, which is my plan. So hopefully it all goes well, but we shall see, right? Now, dividend payouts. Speaking of our largest dividend payout, because of the increased share count of T-SPY, we got some amplified dividends. So jumping into our dividends this week, from T-SPY, we got a massive $1,934.05. So we increased our shares from 41.18, I think it was, or 41.20, so 4,120 shares. We had increased that by a good amount. So now we own 6,501 shares of T-SPY at 29.75 shares. We were paid out that massive amount there of nearly $2,000. Now, this is also the very first month that we've held and went through an X dividend with XQQI. This is the NEOS boosted NASDAQ 100 fund. We own 5 shares. They paid out $92.16 per share. That paid us $4.61. And we also sat through our very first X dividend of XSPI, ticker symbol XSPI. And based on our 5 shares, they pay out 0.713 share. And we received $3.57. Now, all of this together, if we go ahead and bring it in, we were paid out in the very first week of June, $1,942.23. Now, a percentage of these dividends I'm going to retain in the portfolio, which will cover the margin cost. It's going to cover the original portion of the dividend, prior to the amplified portion of the margin. The original amount will get transferred and moved to my cash account. The excess portion that I'm going to be receiving because of the margin shares, I'll call them, that those dividends that I'm getting paid out, a portion of that is going to remain in the account to pay down the margin. A portion of that's going to be used for controlling my margin percentage. And the remaining portion will be used to reinvest in dollar cost average into the market when the market has fallen 5% or so. That's kind of the plan going forward. And I'll be tracking that not in this video, but I have to create a sort of tracking system for that going forward. And we'll cover that more here in a future video. Okay, so that is the dividend payout that we received in the very first week of June. So more to come, right? Now, jumping into our dividend portfolio and income breakdown, I haven't exactly came up with the process of how I want to separate the margin shares that I picked up and keep track of the margin dividend, the amount of dividend that I want to set aside to cover the margin cost, the amount of dividend that I want to set aside to take care of the margin buffer, and then the percentage of dividend that's going to be reinvested into the portfolio. So I haven't came up with a system yet. If you guys have seen a system of keeping track of margins separately from your original shares, let me know down in the comment section below. I would really appreciate it. But we can see here, I've left these as they were before. So my base on my T-SPY is 4120. My base on my TDAC is 4,118. These were shares that I picked up with my original cash. Now, I did amplify this using margin. My TDAC, I picked up 2,147 additional shares. That brings my total share count to 6,265. My income from TDAC increased from 1,573 to now 2,393.23. That's an increase of monthly for that position alone of $820, and increasing my old monthly income from $44.97 to $53.17 with that purchase. That's the total amount of dividends that will be paid out within a month. We increase it by $820. On a yearly basis, that $820 times 12, that'll increase my yearly income by roughly $9,841.85, bringing up our yearly income from $53,968 to $63,810. So massive increase right there just with that buy alone. Now, we also picked up T-SPY. We amplified our T-SPY. We had our original shares of 4120. We added 2,381 shares to T-SPY. That brought up our total shares to 6,501 shares of T-SPY. That increased our monthly income from $1,236 on that position to $1,950.30. If we go and look at our dividends, $19.50, we can see right here, our estimated dividends is roughly $19.50. We were paid out $19.34. So it's within the range. I take the few last month's average payouts and I kind of average it there. So it's estimated to be right around $19.50. Here it came out $19.34. So I'll accept that. Our increase on a monthly basis based off this position is $714.30. Increase in our total monthly payout from $5,317 to $6,031.85. So you take that 714, multiply that by 12, that's going to increase our income on a yearly difference of $8,571.60. So by using this margin temporarily, again, it's going to be a temporary margin until my home goes through and sells, and increase my yearly income. Well, let's go ahead and start with monthly. And increase my monthly income by $15.34. So my plan was, with this amplification, my expected monthly dividend income would be $15.10. It's actually around, it's between $15.10, $15.34, I will say. So that came in line. My yearly difference is an increase of $18,413 of extra per year. And we can see here, if I bump these up, my T-SPY went to 65.01. We can see this will begin an increase, and my TDAC went to 62.65. And we can see right here, everything matches up. So there's our estimated monthly income of $6,031.85 and our estimated yearly payout of $72,382. Now, like I said, that this margin is temporarily being used as margin. Because of the net sale of my home, I should get roughly $125, $130 if everything goes well. And then I will save a portion of that for dividends and then be investing the rest. So I'm hoping to pay down roughly anywhere from 70 to 90% of the margin down. And then once that's all paid down, I can either bump up my margin again to, if the market sold off quite a bit, I'll be dollar cost averaging with that cash, just kind of dump it into the market, pay down the loan, the margin, and it'll be increasing my margin afterwards. So I'm not too worried about what happens here temporarily with the market selling off or not. Now, with that said, let's go ahead and take a look at the Robinhood live breakdown. So jumping into the Robinhood portfolio, you can see here on the 1 day, it is brutal out there. I don't know if your portfolio got hit pretty hard, but our portfolio got hit a whopping 4.66% today, being dragged down seems by just the market in itself. Now, we can see here that at the beginning of today, the portfolio had actually been doing pretty good throughout the week. I was doing pretty good, pretty positive. And then we ended here on Thursday, on the 4th at 1 p.m. market close right there. Our portfolio was sitting pretty healthy at $359,021.66. And then after hours, we saw that movement. And then we saw all the numbers coming out with the job numbers coming out better than expected. Potentially the Fed's going to be raising rates. There's no deal right now with the Iran war. And the market sold off, recovered a little bit, sold off, and then, into the after hours. It looks like, maybe potentially into the after hours, kind of moved up a little bit, but in reality, I do think we're going to have a continuation into next week of a bit of a sell-off. Now, we are essentially back at, I believe, right around like May, my birthday, right? Right around my birthday, we were at 342. That's essentially where we bounced back to. May 19th was my birthday, and the portfolio fell to that level and recovered here within that time frame. We're still a decent, in a healthy level. Now, our margin, as we said, we've been using some margin here. Let's go ahead and get this thing to load. We can see that we're using a little under $126,000 of margin. This is my plan. Our margin buffer, we're very safe at 65.28%. And we could continue to use more margin. I don't plan on using any more margin. As I said, my home sale will wipe out a good portion of the margin being used. And then if the market stays down and suppressed, my new capital that I'll be added into the market will wash away the margin that's being used. And I could just use margin at a later time to buy at these dips. If this stays suppressed for the next 30 to 60 days as I'm closing on my property, then I'll be able to just wipe it away, buy in at a lower price. But we shall see, right? It doesn't, overall, this isn't stressing me out at all. I have a plan going into this. And if the market sells off 10, 20, even 30%, will be completely fine. I doubt it'll sell off that heavy, but this is a pretty good day right here. So we're definitely back into that slish slosh taking place. And overall, I'm pretty excited to see the market actually dip. We've had 10 weeks of straight green. So a bit of a dip here taking place. That is completely fine. Now, we do have some cash in the account, right? Every time that I'm paid out dividends, I take the dividends and I move it into my cash account. The cash account, I just took that large T-SPY and I sent it all over there. I still have to go through, create my system of how much of the cash that's paid out from the margin I want to shoot over to the cash account, and how much of it do I want to retain here. Right now, it was fine. I I took the whole amount here and I paid it out. But eventually, by the end of this month or on a daily, we'll have to see how this adjusts. We do have some daily interest here of $13.87 times 30, we'll say, is $416. If we go back over here to our plan and we look at the estimated margin cost, 468, that's underneath our estimated margin cost. So this I estimated it at a borrow rate of 4.5. Our borrow rate is actually 4%. So it's a lot. It's cheaper than I was expecting. So I'm actually spending less interest borrowing the capital to buy into the market. So I'm okay. It looks pretty good, healthy here. You can see all this right in through here. Our T-SPY, our TDAC positions, and all of that. And in the next 1 to 2 months, I'm really hoping to have that home sell and get that margin washed away. If the market stays at these lower levels, then we'll reinvest using margin at these lower levels and amplify our recovery on the way up. So guys, that is going to be it for this video. I don't plan on selling anything here anytime soon. I'm going to continue to hold dollar cost average with some of our dividends that were paid out, and then continue to, monitor the market. That's all we can do, is monitor the market, continue to dollar cost average. Don't get emotional about your portfolio and all of that stuff. I hope everyone had a good week. And if you guys have any kids, have a great summer, because now that the kids are all out of school, there's a whole lot of activities to be done, right? So that is going to be it from me. I do appreciate everyone for tuning in and hanging out. If you guys have any comments or questions at all over something, I know this is a long video and I really wanted to break this up into a specific margin video and a few other things, but it all got kind of wrapped into one just because of time. So that is going to be it from me. I do appreciate everyone for tuning in. Be sure to go down below, smash that subscribe, smash that thumbs up, and I'll catch you guys in the next one. Bye-bye.